Pessimistic market sentiment is to blame for the downward correction of oil prices. Besides, oil prices have been weighed down by the latest decision from OPEC and its allies to ease output cuts since August. The Russian ruble is extending weakness amid slipping oil prices and the risk of mood. September Brent futures were 1% down in midday. The Brent benchmark rate settled down at $42.98 a barrel. August WTI contract shed 0.8%. Buyers of the North American oil are fighting for the level of $40 a barrel. Trading sentiment in the oil market still depends on the latest OPEC Plus meeting. Large oil exporters made a decision to relax the conditions of the oil production pact and ease oil output cuts to 7.7 million barrels per day from 9.7 million barrels in the previous edition. Experts predict that oil production could increase by more than 2 million barrels per day, bearing in mind that not all participants are committed to their quotas. In this context, the market fears that growing energy supply will outpace demand. Such prospects are realistic, as a lot of countries are reimposing restrictive measures due to resurgence of new coronavirus cases worldwide. So the oil market is likely to go on with a downward correction. At the same time, technical analysts do not foresee a steep decline of oil prices. On the contrary, technical charts indicate a new rally in the oil market. Brent crude futures have many times approached the level of $43 per barrel but then pulled back. However, now the situation is quite different. Brent crude has not fallen sharply as before. It's consolidating near $43 a barrel. It means that the bulls are taking the upper hand. Therefore, the price is likely to break through this level and rise even higher. If so, the next target level may be $48 a barrel. The ruble lost momentum against the US dollar. The pair gained 0.3%, climbing to 71.80 in the afternoon trades. The ruble is likely to continue trading near the current levels. The greenback may grow to 72.50 amid the slow recovery of the world economy, the spread of the coronavirus, and growing tensions between the US and China. Reportedly, Washington is considering banning traveling to the US by all members of the Chinese Communist Party and their families. Market sentiment deteriorated significantly against such a background. Traders are now ignoring the news about the new US sanctions against Russia. However, it may change as the US presidential election approaches, and such news is sure to weigh on the ruble. In the short term, the US dollar versus the ruble pair is expected to trade near the lower boundary of the 70 to 75 rubles range. That's all for now. Thank you for watching and stay tuned.